And we are live on Livestream Tuesday. Welcome, everyone. Today, I'm talking Tesla, I'm talking new energy, I'm talking solar stocks because I've been watching the price action on these stocks now for the last couple of months. And yeah, it's looking really clear that these are been bottomed out and that a new cycle is about to begin. And one of the things that the most people that are new at investing, non-professional investing, that one of the hardest things to figure out because it's a real mind bender are these cyclical stocks. And truthfully, it's even hard to know necessarily what parts of the economy, what stocks are cyclicals. Tesla is definitely it's a growth stock and a cyclical. I mean, many cyclical stocks, especially if they've been around for a while, are just cyclicals. But if you're early enough in a technology curve, you can be growth, but still have a cycle that is generally, going in the upward direction. But hey, before I get started with all of that, let me do all of the legal disclaimers, which is that this live stream and the content from ATG Digital Media is not investment or financial advice. It is presented as opinion, information, engagement, and I think most important of all, entertainment, right? Yeah. All ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations have significant risks. What's an investment operation? Buying or selling stock, crypto, option, and yeah, you can lose money. That's the loss of your principal. Next, the owners, employees, contractors, own, trade, transact in the securities that are mentioned in this video, and all the content from ATG Digital Media that includes our model portfolios, our updates, Substack, all the content that we produce. And speaking of all the content that we produce, there's the Substack, paulmampili.substack.com. That is sort of goes out daily and it's completely free. There's my Ballman Speculating podcast. After this, I'm going to go do a podcast, trying to get to 2 a month. YouTube, which I'm currently on. And then there's social media. I am very active on X, used to be called Twitter. Instagram, we are mostly inactive. Facebook, we are active. Dean is often posting things. And I go on from time to time and do Facebook live sessions. If you want subscriptions from ATG Digital Media, we sell subscriptions which begin at $9.99 per month. I should put that in per month. And then someone remind me, please, to put up the stocks for STEPS, which is the ACRONYM portfolio that I have created to mark what I believe is an important bottom and buying moment, in my opinion, in my judgment, for Tesla, for stocks that are in the new energy category, which alongside with most growth stocks have just gotten crushed, destroyed, and devastated over these last 3 years. Okay, a little bit of financial education first, okay, before I go into STEPS, which is the ACRONYM portfolio, which has STEPS, so 5 stocks, which come from various different ATG digital model portfolios. But first, just a little bit of education, because it's relevant not just to new energy stocks, Tesla, etc., which is that there's different kinds of stocks. Most people will categorize into 2, Paul. There's value, there's growth. The thing is that there's also something called a cyclical stock. And without going into a very complicated explanation, cyclical stocks are very sensitive to either the big economic cycle, which is the US economy, or else something that is very particular to their individual sector or industry. And sometimes that thing is debt. Because cyclical stocks, the one thing that marks all of them is that they all have large plant that is put up with debt. And so if you load up on capacity at the wrong time, you have a lot of debt and you have a lot of capacity, that it looks like at the top that there is, demand aplenty, right? Everybody wants this, but it's the top and demand is peaking and surely, and first slowly, and then suddenly about to fall off a cliff. And as a result, owning cyclical stocks is a mind bender. I mean, it took a lot of time for me to sort of like really work out like, oh, these stocks you actually want to own really when things look terrible. Yeah, you want to own these when things look terrible. Yeah. And then you sell them when things look fantastic. Yeah, I mean, I told you it's a mind bender. And what sector today are people incredibly excited about, euphoric about, pointing to you about how great these companies are, how they're unbelievable, how they're going to go up forever? Yeah, I mean, semiconductors and chips, this is a classic cyclical stock. And if you remember, yeah, when I joined Banyan Hill in 2016, number one stock that I recommended was ST Microelectronics. At the time, ST Microelectronics was losing money hand over fist. Yeah, I mean, the cycle was not in their favor. Their sales were punk. Yeah, I mean, they looked indebted. Their operating margins were low. Their gross margins were terrible. And that's where it bottomed out. I mean, in other words, things look terrible, but that's where you wanted to buy it. That's where you wanted to buy it. Contrast that to today, where the semiconductor industry looks fantastic, right? I mean, there's hundreds of millions, billions of dollars of cash flow flowing out, etc. Yeah, and obviously, it doesn't look. I mean, these stocks have all run for about 6 or 7 years. I mean, 2016 arguably was the bottom, and they've run for 6 or 7 years, and then we've gotten one last big pump, a huge pump, right? As Chat GPT drives people to search for like, what is the magic investment that can really deliver on artificial intelligence, and people load up on Nvidia and SMCI and AMD and Micron Technologies. And hey, I know telling people what they don't want to hear, yeah, it's unpopular, but I have come on YouTube. I've gone on my updates in HEG Digital Media, in the Substack, and made this point, which is that cyclical stocks you want to buy when they look terrible, when the news is awful, when the sentiment is totally like, this is the last thing that I want to own. It makes me feel terrible to want to own it. Look at these numbers. Look at what people are saying. Look at this. Look at that. Everything's, but that's when the prices are dirt cheap. That's the dirt cheap. All right. So, yeah, I mean, and one thing has become clear, and it always was true for the car business, for Tesla. I mean, automobiles have always been cyclical relative to interest rates. Why? Because the vast majority of people finance their cars. And today, with car prices where they are, yeah, I mean, it's I don't have the specific number, but if I were to guess, the vast majority of vehicle purchases, yeah, I mean, interest rates are a critical factor. So the business of selling cars is highly cyclical to interest rates, and it's obviously very cyclical as well to recessions. In other words, if people lose their jobs, they don't have the ability to pay for their cars or to buy a new car or to even desire a new car. So they're cyclical to these things. So no shock then in terms of Tesla that like over the last, 3 months, they're cutting prices, trying to shed inventory. Everything looks ugly, right? I mean, they're supposed to report tonight, and people are like, will it be this? Will it be that? Contrast that to what was in 2021. Yeah, I mean, was there euphoria on Tesla? Yeah, I mean, yeah, at $400, $421 when speaking, nobody cared, right? I mean, they were like, this is going to go to the moon. And you know what? It's still a growth cyclical, right? It's still a growth company. They've still got decades of growth ahead of it, but it is still subject to interest rate cycle. It is still subject to economic cycle. But right now, what Tesla really has gone through is a reaction relative to interest rates, which is that as interest rates have gone up, the sales have gone down just about the time as the production for Model 3 has ramped, just about the time as the Model Y has ramped, and just about the time as the Cybertruck is setting up to ramp. And so, of course, the expectations as Model 3 and Model Y were ramping up, the sales numbers went through as interest rates went up. Well, high sales forecasts, high interest rates. Yeah, reality met, which is that, not as many people showed up to buy as the forecasts. So, people got disappointed. In other words, that was about 2021 was about peak cycle. And about now is bottom of the cycle. And how do you know this really? Many people will focus on the numbers, but truthfully, the real clues, the real tells, the real triggers are psychological. That's been my experience, which is that, again, going back to the semiconductor and chip cycle, which is that I was around for the big daddy of chip cycles, which was 1999, 2000. Back then, the big hype was around internet and how the internet was going to drive computer sales. Everybody, of course, was going to be online, and that would send chip sales to the moon. If you had go and look at a chart from 1992, 1993 to 2000, well, it looks not that dissimilar than the chart from about 2016 to about now. And that was top of the cycle. And after that, chip stocks, they lost essentially 80% from the peak. 80% from the peak. You can go and look at this. And so that was sort of like one of the original chip cycles. Since then, chips are like a more mature industry. They've been around as an industry for 30 or 40 years. They are a cyclical, pure and simple, rather than a growth cyclical. Tesla, on the other hand, the company only has been around since 2009. EVs, heck, I went and looked. In the year 2018, when I bought my first Tesla delivered 250,000 cars. I wrote a Substack, with a picture. I got a little red carpet. I got a little welcoming committee. 250,000 cars. Now they're producing millions of cars. So they are a cyclical stock, but they're also a growth stock. And that means that the cycles are much shorter, and there's a peak and there's a bottom, and they come, somewhat rapidly. So if I'm right, no guarantees, no certainty. If I'm right, then we had like a peak in 2021, and now we're seeing a bottom. And the psychological clues, tells are all in place. At $421 in 2021, was everyone happy, giddy, and euphoric? Absolutely. What about now? Well, I can tell you, nobody's that excited about anything. Nobody really cares about anything that positive, that anybody wants to say. There's layoffs at Tesla. They're cutting prices. People are sending you pictures of all the Cybertrucks that apparently can't be delivered and all these things. Classic bottom tell, classic bottom clue, classic bottom trigger, in my opinion, that you see, especially for cyclical stock. Now, the upside of buying a cyclical stock somewhere near the bottom is that, the next cycle high, is going to produce revenues that are going to shock people, cash flows that are going to shock people, profits that are going to shock people, and that will set the stock soaring into the future. Remember, I told you, this is a mind bender. Most of us, we want to buy into good news. But with cyclical stocks, like, yeah, it's even more in the sense that when you go look at the company, things look, yeah, they're always at their worst. Now, a second element of education that I want to provide before I get into steps and show you the 5 stocks that are in the steps acronym portfolio to sort of like mark, this bottom for Tesla, new energy, solar, whatever you want to call it, which is that stocks tend to trade together. Stocks tend to trade together. Now, I did a number of YouTube videos on the ticker symbol was TAN, which is the solar powered ETF. And yeah, it had, stocks like Enphase and Solar Edge and any number of others. And then you can kind of go see that like approximately, yeah, they peaked out approximately the same time as Tesla. Now people say, well, Paul, all growth stocks peaked out around then. Yeah, but there's a cycle to this, right? Which is that Tesla and these new energy stocks, they for whatever reason they trade together. Now, I mean, some of the times, it's not always clear exactly why they trade together, but it's been very clear to me from tracking Enphase, from tracking Tesla, from tracking some of the stocks that I'm going to mention in steps, that these trade together. In other words, despite everything that is talked about Tesla, it seems to run on like, yeah, when like these the new energy stocks, the solar stocks, when those bottom out, Tesla seems to bottom out. And perhaps it has to do with interest rates, perhaps to do with the oil price. I mean, I don't necessarily have all the exact answers, but whatever it is, these are like sort of like tied at the hip. And you can kind of see all of them sort of like bottoming out at the same time. And they also all kind of look, equally horrible. One of the companies that's in, remind me if I forget, because sometimes I get so involved in these presentations, I forget all the little details that I want to mention. One of them has like a 30% short interest. I mean, it's a tiny little company. And just like, the semiconductor chip stocks in 2016, it looks like it's about to go bankrupt, except like, they just got like, I think like $100 million from the biggest, one of the biggest oil companies in the world, Total Energies out of Norway. In other words, everything looks terrible. And that's why it's cheap. It looks risky. And that's why people are short. In other words, like, yeah, everything, in my opinion, obviously, in my judgment, is lining up for where, yeah, 1 year from now, yeah, I mean, people are going to look back and go, whoa, I can't believe Tesla was at 140. I can't believe that Enphase, was at, this. So this is, in my opinion, kind of like the moment, kind of like the moment, like similar to buying into ST Microelectronics in 2016 to mark the bottom of that chip cycle, which in my opinion, like now is ended. And that also is like a little bit of a source of funds in the sense that professional investors, well, the good ones understand cyclical trades. I mean, I'd say the bad ones have no idea. They're about as clueless as everyone else, but the good ones definitely understand it. And if you want a good quote, maybe I can find it. I put it up on X, and maybe I can put it up again. You can go and look up Peter Lynch. And those of you who don't know who Peter Lynch is, he very famously ran a mutual fund called the Fidelity Magellan Fund for 15 years, 20 years, and just smashed the market, just, year after year. I think he compounded it 25% a year. I mean, this is like one of the great growth investors. And he'll tell you like, yeah, exactly what I said, which is that the time to buy cyclicals is when they look terrible, and time to sell them is when they look beautiful. You can Google it and you'll find the quote. All right. I've got some questions here to talk about Tesla's energy portfolio. So, and I've gotten this question from Steve before. So let me share a few things on that before I get into steps. All right, let's see here. So this is for you, Steve. This is Tesla's energy generation and storage segment from 2015 to 2023. It's about $6 billion. And truthfully, it doesn't really register. For example, in 2024, Tesla will generate somewhere in the range of $103 billion or something like that in revenue. So 6 billion, not going to move the needle. I mean, it will help on the margin, but yeah, until they scale up much, much more to where they're generating maybe 25, $30 billion, which is a 5x from here. Maybe at the top of the next cycle, they'll be here. But at this point in time, it's not big enough to really be a big deal. Having said that, the actual business itself is growing gangbusters. I mean, it's their batteries are selling to the extent they can get installers. The roofs are selling. So, everything's going well. It's just not big enough necessarily to make a big difference in terms of what's going on. All right. Now to steps. All right. Let me increase the size of these and then also put up the banner. This acts as a spoiler. All right. So I mentioned that there is a small company with 30% of its shares sold short. And that is this SunPower company. SunPower, what do they do? Well, essentially, they're in the solar power business. They finance installations of solar power. This is a business that is very sensitive to interest rates because most people finance their installations. So no shock that, into rising interest rates, installations, fall off a cliff. And at the low, they've got debt, and they're tight for cash, and of course people are short. Why? Because the conditions look terrible, right? But conditions look terrible, but the stock price reflects that. I mean, go look at the stock. It's like, I mean, it's again one of these mind benders, and there is risk. I mean, I'm not telling you it's risk free. There's definitely risk. I mean, is there a chance to go bankrupt? There is a chance. But is there also a really good chance that, like, at the peak of this cycle, people will look at $1.96 for SBWR SunPower and be like, I cannot believe that was there at this price, whatever, because who can believe today, if you were a buyer of NVIDIA, whatever, in 2011, that it is where it sits today. Yeah, I mean, or I'm sorry, 2016, where it sits today, or AMD. Yeah, no one. I mean, this is like, if you get a cyclical trade right, this is a fortune maker. I mean, you can get 10x, you can get 20x, you can get 30x, you can get 40x. And I'm not BSing because, I mean, what? Yeah, I mean, ST Microelectronics was a 6 to like 50. AMD, I think we put in at 10 and we cashed out, I think, for like, 500-600%. In other words, big gains come with risk. But I mean, you want life-changing gains. These cyclical stocks at the lows. Having said that, look, and listen, folks, do not go all in on any single stock. Rules of the game. I mean, as tempting and as high conviction as I am about all this, I would never bet all of my money on a single stock. And if you do, you take the chance of getting wiped out. So this is one of the reasons to make a portfolio. And I put this in, which is that, and I put this warning here, which is, again, a piece of information, which is that most people will pick one stock and bet their entire stack. Everyone wants to get rich instantly. Everyone wants to get rich, well, if not instantly, sooner rather than later. And the point of a portfolio is to give you many chances to win. If I'm wrong about any one of the stocks, one of the others may work out. In other words, I could be right about the general bet, but wrong about one of the stocks. and you pick that one and you go all in, yeah, I mean, you can lose all your money. Second is that no one really knows how the future is going to unfold. I mean, and we are very, very sensitive to the path. In other words, we of course all want everything to be a smooth ride up to the right, but it tends to be like this, or it tends to be like this and this. So the stock with the biggest gain may be, a dog in the short term. In other words, you're impatient for it to go up, but it doesn't do that. But yet, longer term, that's the biggest winner. Or else the big early high flyer can turn out to be like, yeah, that apparently, Wall Street was putting it up and to get people into the stock, and it's a loser. Bottom line, you got to pick a portfolio of stocks. Never make an all-in bet on any single stock investment. You know why? Because the future is too uncertain, unpredictable, and unknowable. So going back to these stocks, I started with SunPower. This is a tiny company with an obviously low price, $1.96. I know people love low price stocks, but another piece of education, always look up the market capitalization. 385 million. Yeah, it's a small stock. 30% short. Yeah, I mean, why does that matter? Well, because into any good news, either about the company or the industry, I told you that group effect matters, right? I mean, so we own another stock called Sonova, which is in our diamond tier. If they report good results, or any of the other companies report good results, Enphase reports good results, and I believe they report today, there will be a group effect, a wave. I think Jim Cramer used to call it the pinball effect. I think calling about like from bowling, the pinball effect. And the shorts will be forced to cover. And they're forced to cover, yeah, I mean, with a 30% short position, yeah, it can jump higher. Now, it won't stay there perfectly because, yeah, if there's a big short position, shorts are forced to cover at a high price. That demand is sucked up. Then, demand will trail back down. And since we're betting for the longer cycle, there's going to be ups and downs. So yeah, I don't know necessarily what each of your timeframes are. We have some very short-term traders. We have some medium-term traders, some long-term trade investors. We have people that choose to do some mix of all of it. You have to work out for yourself by doing additional work on anything that I'm saying to figure out what is right for you. All right, the second one is Tesla. Tesla at $145 per share is a $455 billion company. At the peak, at 420 or so, was worth, its market capitalization was worth over $1 trillion. And people talk about the Magnificent Seven. But Tesla has really not been magnificent at all in terms of its stock price. In fact, it is, down 50%, and that is very typical. 50% is very typical for a growth cyclical. For a pure cyclical, like semiconductors, or in another time, steel is a classic case of a cyclical type industry. 80% is often where you'd get interested at the low. Enphase Energy, which we just put it back into, we put this into the silver tier. Silver tier is our multi-cap portfolio at ATG Digital Media. This is a $15.7 billion company. So yeah, I mean, big, but not big compared to Tesla. But Enphase has a lot of great technology. They've expanded from being an inverter company. An inverter is critical to solar power. They provide storage solutions. So this is, in my judgment, has the best product set of all that are out there. And so if you're owning Tesla, I mean, if you want to own the new energy space, you got to own Tesla because that's the leader of the pack. And Enphase is sort of the leader of the pack that is like not Tesla. They're a mid-sized company at 15 billion. And at the top of the cycle, they where could they go? I mean, cyclical companies, they peak 7x, 10x. If the cycle's big enough, I mean, it could be much bigger. Again, no guarantees. Don't bet the house on any single stock. All right. Another part of the new energy sector that, again, I've seen signs that this is bottomed out is lithium. Now, we sold the lithium stocks out. I can't remember exactly. I think it was about maybe 6 months ago, something in that range, out of all the ATG digital portfolios. And then I saw the price action on Piedmont Lithium, PLL, and I was like, yeah, that looks bottomy. And of course, at the bottom, the news doesn't look great. It looks like they need money. Yeah, it has all the classic triggers, clues, tells associated with bottoms. Now, hey, now could I be wrong about this? Yes. In other words, if you're like Paul said, it's the bottom and 1190 right there, it's the perfect absolute bottom. No, folks, it doesn't work like that. It could go to 1185, could go to 1125. I mean, or it could go straight back up. Yeah, all possibilities, exist. There are no guarantees or certainties in this business. Prices can move very suddenly. For example, this morning, SunPower looks like pure manipulation to me, was marked down to $1.78. And then if you go look at the price action by like 9:30, by like 10 o'clock in the morning, it's at 215. And then it pushed down again. There's a lot of games that go on in the market. There's a lot of manipulation that goes on, especially on these smaller stocks where it doesn't take a lot of money to move them around. If everyone goes in on one side of the boat, yeah, longer term, it might be fine. But over the next, whatever, 1 day, 1 week, 1 month, there will be a fight, in between all of these things where the prices will be set, yeah, in and around something, but won't matter if you are long term and if you are also buying in slow. I like to say buy low, buy slow. Anytime you feel super excited to buy, that's the wrong moment to buy. When you feel least like buying, when it feels gut wrenching, those are the good buys. All right. And the last stock is one that if you were with me at Banyan Hill, which is my previous publisher, for those of you who are new to me and new to this channel, I won't repeat my history at Banyan Hill. Please just look up my LinkedIn profile on Google. Will give you my past history. STEM, in my judgment, is, as far as I can tell, the only true sort of new energy software company that is looking to coordinate distributed energy resources. DER, that's the acronym that you will find if you go and read industry sort of like newsletters and papers, distributed energy resources. And what does that mean? Well, a battery is a distributed energy resource. Solar panels are a distributed energy resource. Utility scale solar panel like installations, they're a energy resource. Wind power is a distributed energy resource. And the nature of new energy is that it is intermittent. In other words, the sun doesn't always shine, the wind doesn't always blow. You got to coordinate when it's producing power, and then sometimes it has to go into storage, sometimes it has to feed into the grid, sometimes it has to be used by crypto miners because you can be producing so much power, like happens in Texas. Texas has got extraordinary amount of wind power that sometimes the prices are negative. And so they need somebody to take this power. And crypto miners are happy to take negative power. Either way, my point is that it's a complicated set of ways to produce power compared to utilities that have, a giant power plant that's got to run all of the time. That compared to that, all these different installations. For example, I have 2 Powerwalls by Tesla. And in North Carolina, I'm not allowed to sell power. However, for a small subsidy, and it was small, wasn't great, Duke Power, which is my local utility company, incents me when they are short of power, which in a world when solar power is increasingly a very large source of power, they have too much power when the sun is shining. And on very cold days and also cloudy days when the sun's not shining, they can suddenly be short, and then they want me to be off the grid, and they incent me then to be on my battery versus taking power from the grid. So this is the kind of solution problems that are created in this new world where increasingly solar power, battery power is becoming a larger and larger part of how we power our homes, stores are being powered. And despite whatever anyone wants to say, it is now large enough that this sector increasingly over time, in my judgment, in my opinion, is going to replace the legacy incumbent energy sector. It's not going to happen in a year. It's not going to happen in 5, but 5 years from now, it will be significantly bigger than it is today. 10 years from now, it will be closing in on 30 or 40%. And certainly in 10 or 15 years from now, it will be a majority of how we power pretty much everything. And that means that there will be cycles, but these are growth cyclical companies that are going to keep growing. In other words, unlike chip companies that will go through 80%, 90% declines, these will have cycles relative to the economic cycle and interest rates, but they will also keep growing. And we won't stay in steps forever. We will probably trade in and out, kind of like we sold many of them out and we're coming back in. We'll do that a few times, before, new energy ends at peak. I don't know if I'll be living. My guess is, this transition will take 15, 20, 25 years. But through these, if I'm right, new energy stocks in an up and down fashion will keep rising. And then the incumbent legacy stocks, I'm sure there will be periods when it seems like, oh, oil's back. Oh, I should get in. But longer term, it's very clear we are transitioning, and that transition is well underway. And you want to be in, these that are small, growing, and where, there's so much runway left for them to grow. So, this is my acronym portfolio steps. So, which is, let me put the ticker symbols up again, which is SunPower, SPWR, very small, risky, big short interest. Tesla, don't need to provide an explanation. Enphase, which, when I was at Banyan Hill, we made a lot of money in Enphase. We sold out pretty much near the peak. Piedmont Lithium, I think we lost some money. Maybe we made some, I can't remember. But the lithium price has just completely crashed. And we're going to need a lot of lithium. There's just no question about it. Lithium ion is still the dominant battery technology that exists today. We know how to produce it. We know how to scale it. It's obviously in electric vehicles. It's in any number of places. And then we have this critical need to coordinate all of these resources, which is STEM. So that's really what I want to show and present to you today, which is that my basic idea is that new energy, Tesla, solar power stocks, they bottomed out. So that's the number one takeaway. Second, which is that if you go and look at these stocks, they're going to look terrible. And the reason for that is they're cyclicals. And generally speaking, cyclicals look terrible at the bottom, but that's when the stock price is cheap. And the third one is that these are sort of like growth cyclicals. Why? Well, because we're in the middle of an energy transition from old school legacy oil and gas to whatever you want to call it, new energy, alternative energy, which primarily is essentially what? Solar power, wind power, and batteries. This is, what is going to comprise new energy. And with that, I am going to stop. I'm going to take these off and then look at some questions and comments that we have in the chat. David has eats very well. David was on our live stream where we celebrated, commemorated, brought in the Bitcoin halving, and and obviously a big fan of Indian food. Says First time attending butter chicken tonight. Started marinating yesterday. Got to turn the thighs back up. Actually, I have read that you only really need 30 minutes of marination, but overnight, is obviously better. Steve wanted some comments on Tesla's solar roof. Solar roof by itself is not separated out. Their energy business is separated out, and I showed you a chart of what they have done. This is the same comment. One more request. Can you comment on 3D systems or direct me to look at gold or silver tier comments you discussed today? Let me comment on 3D systems. So one of the big sort of like, it's some mixture of a societal movement, a economic movement, and a technological movement is this, which is like for the better part of 30 years, the United States, by official policy, political policy, social policy, economic policy, has chosen to send the manufacturing pretty much of everything to other countries, primarily China. And over the last, 10 to 12 years, we have slowly understood that that was a mistake. And so there is now more and more plant that is being reshored to the United States. This is continuing apace. And it is my judgment, my theory, that when we start to rebuild our manufacturing capability, which is the ability to make anything, it will be centered around using new technologies like 3D printing. I doubt that we are going to go back to doing pure old school manufacturing technology. That would seem incredibly dumb to me. And 3D printing is the dominant form of making almost like, you go to new world companies, America 2.0 companies, if you will, SpaceX. They use an extensive amount of 3D printing. You go to Tesla, they use an extensive amount of 3D printing. At what point will these 3D printing stocks respond, start to anticipate that future? Well, obviously, I have been 100% wrong in terms of the timing because we have had 3D systems, Stratasys, Proto Labs across various portfolios for, the entire time that I've run those model portfolios. Still, I look at the technology, I look at the companies and say, well, I don't think it's an if, it's when, these technologies are incorporated into the making of things. And once we get to enough scale, well, these stocks are going to rip and keep ripping higher for like many, many years to come. At this point right now, many, they're very exposed. 3D systems and Stratasys are very exposed to sort of like almost single industries, like for example, dentistry, where 3D printing is widely used, or specific parts of healthcare. This is too small an exposure to have a very giant effect on the sales, etc. We need a more general sort of like application of 3D printing. The companies have indicated they are seeing the first signs of it, but yet obviously, once again, the economic cycle is very much affected by interest rates. When interest rates go up, people tend to pull back. And so their businesses have been affected. They've indicated that, things are not getting worse, but they haven't indicated yet that they're getting better. So in other words, this is a cyclical business with a technology transition that is sort of like behind new energy. Why? Because, companies have to make those decisions to move all these production facilities from China or any other place and move them here and produce over here and then implement these kinds of technologies. So hopefully I have given you some amount of the answer. Rashad says, Paul, you think Elon is Satoshi? Hey, I don't think Elon would be like struggling so much. I know Elon loves to work and likes to struggle, and if Elon has a million coins like Satoshi, yeah, I don't know. I don't think he would be worrying about Tesla going bankrupt when they were scaling up for the Model 3. He just cashed some of those Bitcoins in and have paid for it rather than go through like a near death struggle with Tesla or like whatever he might have with Twitter or anything else. Let's see here. Paul, can you explain if in this halving cycle, meme coins will perform and then altcoins? My general study of crypto suggests that Bitcoin goes first, and you have Bitcoin sort of start to run. And about the time it starts to peak out, people start to cash out, and that's when the liquidity starts to flow into altcoins, meme coins, and others. And there is kind of like that pattern, at least in previous halving cycles, is what has held. In other words, it's the cashing out of big profits from Bitcoin that produces the liquidity that goes into the altcoins, meme coins, shit coins, whatever you want to call it. That's what's there. We are just at the beginning of this halving cycle. And so my view would be that, altcoin season, if you will, is going to come, probably sometime next year, because we need to see Bitcoin really respond to the halving supply shock in terms of producing price. That will drive more and more people first into Bitcoin. And then as those sort of like gains start to be so large, you'll start to see money increasingly start to push out of Bitcoin. That's my view based on past halving cycles of how money flows. I would expect that some meme coins will work. I believe there is a role for meme coins as a medium of exchange in crypto. And certainly there are any number of altcoins that have very specific utility and purpose in decentralized finance to replace existing financial companies and products and services. And I expect many of them to do very well over time. Now, I'm not saying that, some of these won't run before Bitcoin peaks. I'm just saying, like, as a general sort of like, if you want to see it as a big movement, that'll come once there's much bigger gains in Bitcoin and as people start to cash out from that. Kevin says, good afternoon from Lakeland, Florida. Good afternoon, Kevin. Thanks for being with us. David says FMI, which is Foundation Medicine, which was a huge gain that we had when I was at Banyan Hill. This got taken over by, was it Roche or Novartis? I can't remember. Yeah, that was a big gain in a fairly short period of time, but that was a takeover. That was a takeover, not a cyclical. So that's slightly different than what I'm talking about. What about 3D or DM? I got caught, as did many growth investors, in buying at the top of the SPACs and the IPOs. And in hindsight, those all got priced at very high levels and got sold because of the pandemic, because of the growth we were seeing in so many new technologies at the time. It looked like they could grow from there. And if those growth rates continued, they didn't look expensive, but obviously, the pandemic ended, the lockdowns ended. Those stocks just dropped off a cliff in response to higher interest rates. So my general view has been I want to be in the strongest. I want to be in companies that clearly have cash. And the time to be in sort of secondary, tertiary ones will be once it's very clear that the cycle has turned. And then where, the illiquidity and the distress can generate very large gains in some cases. So for now, no desktop metal, or I don't know what 3D is. I have to be truthful. David has more questions. Am I still bullish on ORA? That's Ormat Technologies, which is geothermal. I might be bullish, but I doubt we'll ever recommend that again. I don't know how geothermal as a technology can scale. And while the company may do well, I have sort of like stopped following it, so I cannot give you an opinion and have no real view on it anymore. Pulverizer says DDD went up like a rocket that one day during the short squeeze. Everyone should have sold out then. It was well over $50. IIRC. I don't know what that means. What does that mean, Pulverizer? I'm not cool enough to know. Well, this in language. Yeah, I mean, in hindsight, that was a short squeeze driven by liquidity. Still, the technology is real. The capability of the technology is extraordinary. And yeah, I mean, I'm willing to sit. I'm willing to sit. I mean, I know it sounds like blather, but how long did it take Apple to show its potential? How long did it take NVIDIA to show its potential? Yeah, it took a long time. I'm a believer in 3D printing, so we're going to hold on to 3D systems. Steve says, always great stuff, Paul. Thank you. Well, I appreciate you coming on. Rashad was, are biotech companies sensitive to interest rates? They are sensitive to interest rates, but they're much more sensitive to sort of like the supply and demand of biotech companies. In other words, biotech companies are incredibly beloved by Wall Street investment banks. I mean, there must be, I've never seen a number because they don't tell you, but I imagine that Wall Street, and when I talk about Wall Street, I'm not talking about the money management side, I'm talking about the investment banking side. In other words, the people who sell stock on behalf of biotech companies to regular investors, sell convertible bonds. Why are biotech investment companies beloved? Well, biotech companies have no revenue, right? They take in money from investors, and then they've got a pipeline based on all these ideas as to okay, we'll try to this drug will work for cancer, this drug will work for heart disease, but they have no revenue. So where do they get their money from? Well, they get it from investors. How do they get it from investors? Well, they go to an investment bank and be like, hey, we need 50 million. Hey, we need 100 million. Hey, we need 200 million. And what is that to investment banks? Well, that is the sound of fees, because what? Every underwriting deal for like new money is like 3%, 5% of that. So if they're selling 100 million, 5 million is going to Wall Street investment banks. And so there comes a point where the hype gets like, very high in biotech companies. And the peak in biotech was 2014, 2015. That was the big peak in terms of like smaller companies. Yeah, I mean, some of the bigger companies, which are part of the S&P 500 and other big companies, the investor interest, just going into the index has bid these up. But we're talking about small companies. That was 2014, 2015. Yeah, that's when I used to run a service for a different publisher called FDA Trader, because the publisher is like, can you like explain why these stocks keep shooting up someday? And that was related to FDA approvals and clinical trials. So there's a lot of excitement. Wall Street takes advantage of that excitement to push out, for them, what are stocks? Their merchandise, their inventory, right? I mean, so they'll go to every biotech. You want to go public? Because, hey, there's a lot of interest. All these companies, are selling at crazy high, market capitalizations. This company, which has, just one drug, is worth $600 million based on the idea, the prospect that, maybe they'll get approval. Maybe it'll, be a giant like revenue growth spinner. So in 2014, 2015, we produced a lot of IPOs in the biotech period. And then, of course, most of them didn't turn out. That gets investors a little bit bitter. The cycle, in my judgment, from looking at industry news sources, newsletters, there's been bankruptcies in biotech. So those that cycle also seems to have bottomed out, which is why we've added so many biotech stocks and where we've seen very huge price action. Now, it's taken a little bit of a rest over the last 30 days or so, but I mean, in March, I mean, there was some big price action on biotechs, and that tells you that yeah, the cycle ran out. People gave up. They shed the inventory. Some of the stuff went bankrupt. There was a lot of mergers. So now Wall Street, which owns the inventory and merchandise, they got to mark stuff up, get the excitement higher, and then then we'll have another IPO cycle where they'll produce another 6,000 companies to sell to people. So biotech is on a different cycle than say new energy. Anything on Pac B? They reported their earnings and they lowered their forecast, and the stock dropped 50%. They still have $450 million in cash. They still have arguably the fastest sequencing technology, better than Illumina, but they are small. In my judgment, my opinion, we're going to see a time when pretty much it's just like the way you go and get tested for all these things. We'll have like our genes sequenced all the time, so we will need the speed that PacB has in its technology to sequence at a speed to be able to deliver this. But the stock has just been an utter disaster over the last. We had it in portfolios when I got terminated at Banyan Hill. We carried it over to ATG Digital. We sold it, took a loss. It looked like like it was washed out. Yeah, and we put it in, and it's down 50% from its devastated, washed out level. So we'll hold it and see what unfolds. We also own Illumina in excuse me, last of the allergy cough, in the silver tier. Pulverizer says, if I recall correct, that's IIRC. I have seen that, and I never knew that, so I now feel more informed. Thank you, Pulverizer. Second last question. Views on Plug Power. Well, Plug Power is still the only hydrogen-based energy company that has any sort of chance of working out. There's definitely a mixed bag of opinions as to whether or not hydrogen can ever be a fuel. The way I have it modeled is that lithium ion is the dominant form of energy that we are going to see in terms of battery technology, and hydrogen is going to be used like diesel. I don't know what the split exactly is between gasoline and diesel, but hydrogen can be used for specific problems or solutions where you need very rapid refueling, and where like the mass of what needs to be moved is enormous, like trains or planes or things like that. And so if that is how the future pans out, then Plug Power, looks at a cyclical low, and into wherever the next peak is, it's going to go up, an extraordinary amount, in my opinion, in my judgment. Let's see here. Peter wants to say, do you tell us if it's better to sell at a loss on some options, or do you let them expire? It depends on the liquidity of the options. Sometimes if the options are trading for a cent, I can say to sell, but there's no market for it. So at that point in time, we're better off there's some tiny amount of time value in it. And we can get lucky. Maybe if Wall Street Bets, somebody on Reddit, converges the 0 days to expiration crowd onto our option and bids it higher, then we can try and sell on Friday. But with options, I've got to get obviously the stock right. I've got to get the timing right. So there's multiple things that have to work out, and it is by its nature sort of like streaky. We had a great period. Dan, who is my amazing analyst, said that I think we got 20-something trades in a row correctly, and it looked like the market was going to take off. So we put options on like a number of things, and then went the other way. So we're sitting in a number of options. In my opinion, the market still looks good. We just need them, the money to flow into those particular ones. We need the stock prices to move and the option premiums to move along with it, and then we'll make some money. Pulverizer, thank you for that. Let's see what else we got. Thanks from Pulverizer. Liz, hey Liz, always appreciate your cheery, optimistic outlook. Thank you so much. And yeah, it looks like we have exhausted all of our questions. Check out the Bitcoin Howling live stream. We had a good time. Liz was on. I had some champagne on. Yeah, Bitcoin was what, at 63 and a half, and it's at 66 or something like that. So my last Substack was about Bitcoin potentially going to $1 million. So go check out the Substack. Yeah, and follow me on Twitter, and I'll be back next week with another live stream Tuesday. So thanks all for showing up. Appreciate all of you. Yeah, subscribe to ATG Digital, $9.99 per month, and I'll see you next week. Bye, everyone.